Hello everyone. Today we are going to discuss about the tax group under new corporate tax regime. As we are very well aware about the tax group under VAT, the same kind of concept UAE government have introduced in new corporate tax regimes. So let's focus on the conditions on the basis of which you can form the tax group for your group companies. So condition number 1 is for forming a tax group, you should have 95% common shareholding or voting rights in the group companies. The second condition is that all the companies in the group should be taxable at the rate of 9%. They are not availing the benefit of 0% taxation. And the third, last but not the least condition is that all the companies are following the same financial year. So these are the conditions on the basis of which you can form the tax groups. What are the benefits of forming a tax group? So if you are covered under a tax group regime, then there is only one tax return you need to file annually, and the payment of taxes also you need to do only one time annually rather than paying through different companies. The second benefit is the transaction between the group companies is become null and void. There is no taxability arises between the companies transaction. The third is you can set off your losses against the companies in the group who are making the profits. If you are not a part of tax group, you have not registered your group of companies as a tax group, then also you can adjust the losses of your company to the companies which are making the profits, but you cannot carry forward the same loss in the next year. Let me explain that in detail. So for example, if you are a tax group, then you need to merge your books, or I will say consolidate your books for the purpose of calculation of tax and payment of tax while you are filing the return of a tax group. While if you are not a tax group, you are only group of companies, then you need to file the returns and calculation of tax individually, but you can adjust your losses against the profit of group companies for that year. You cannot carry forward that loss if there is any in the next year. While if you are a tax group, then you are filing one return, and if there is a loss in that one return from the group of companies, then you can forward the same in the next year, and then again for the next year you consolidate the books of accounts and find out the profitability or loss for that financial year. So in that way, being a group of being registered as a tax group, you can take the benefit of carry forward of loss also. So this is as per the consultation document. We are still awaiting further updates from the FTA, I will say. Then we can get more clarity how can you take the benefit of having a tax group. So this is all about tax group. But if you are not registering yourself as a tax group, how you can adjust your losses with the profit of other group companies? Stay tuned with us. We are going to have the next video on the same, that how you can adjust your losses with the profits in the group company if you are not registered as a group. So stay tuned with us. This is Vibha Malik from Horizon Based Consultancy. Thank you for listening to this video.